I reminisce. Yeah. I reminisce for a spell, or shall I say?
Welcome to the Foreclosure Deals Coach podcast, your home for the mindset, methodology, and tools needed to be a successful foreclosure acquisition specialist. And now your host, the Foreclosure Deals Coach, Donnie Coram.
Hello and welcome to the Foreclosure Deals Coach podcast. This is your host, Donnie Coram, your Foreclosure Deals Coach. And, the reason I'm looking so cool today, you can't, unless you're watching the YouTube video, you can't see this, but I really want to reflect something cool that's going on in the foreclosure marketplace right now. So we got a lot to talk about today. Before we get going, we are broadcasting to you live from the Zen Office Suites in downtown Denver, Colorado. So once again, this is Donnie Coram. I've got my producer and co-host here, Mr. John Winston. What's going on, John?
Not too much. Feeling a lot better now that you got the police officer shades on.
I was really feeling that for a little bit. When you're in our situation, getting pulled over is a big deal, right? But it also is an issue of being cool, right? And what's cool about foreclosure investing right now is what's going on with the marketplace at large. I was reading an article that the top state that is getting fix and flips going on at this moment is in Tennessee. Would you believe it's in Tennessee, Jonathan? Why do you think Tennessee has the most foreclosure fix and flips going on right now?
You're going to tell me.
I'm definitely going to tell you. And what's happening right now in that marketplace is you have a reprising. You have a reprisal of people who are coming in. Obviously, Nashville's a really cool town already because I'm a musician myself. One of the things I love to do is play with my band. But in addition to that, you got a music town that has suffered for a while with their marketplace. So whereas a lot of places went way up, Nashville didn't do that. Now you have a lot of dated properties that are hitting the market, and some of them are going into foreclosure, right? And what you're seeing is people are buying those homes and making Nashville the cool town it has always been, is now is going to continue to be. So super excited about that. We've got a lot to cover today on the show. Before we get too detailed into that, though, once again, I want to thank you guys for the well wishes, for the messages, what's going on out there. Obviously, the goal here is to encourage you to join our coaching program, but along the way, we want to educate, we want to inform about the methodology, the mindset, and the tools that goes into being a foreclosure deals investor. So if that's why you're here today, we definitely want to cover that. Now, my favorite cool topic here in foreclosure investing has got to be HUD Foreclosures. Now, if you haven't heard this term, HUD Foreclosures, you're not really a real estate investor. You got a lot to learn. We're glad you're here. I want to help you out. But most of you have heard of HUD Foreclosures. HUD Foreclosures, to give you a quick definition, are homes that have been repossessed by the federal government, right? So if you get an FHA loan, and one common misconception is that the FHA is a lender. A lot of people getting their first time loans think you're getting an FHA loan and the government's lending them that money. The government does not lend money. Like ever, okay? What they do, however, is they insure loans against loss. So say you're Wells Fargo, and if you're Wells Fargo, please call me. There's some money things I want to talk to you about. You have a lot of it. You could help me out. Say you're Wells Fargo, right? And you're doing an FHA loan. The FHA insures that loan against loss. So if Wells Fargo lends the money at a very low down payment, FHA down payment right now is 3.5%, with loan programs going as low as $1,000 down for an FHA-backed loan. So imagine that. You've been saving for a property for ages, and maybe you don't know that you can buy a house, including a foreclosure, for as little as $1,000 down, but most people do the FHA normal down payment program, which is 3.5%, okay? Now, this loan goes for a while. The guy loses his job, his dog, his wife. We don't know the story that leads people to foreclosure, and it doesn't really matter, to be honest, but that house goes into foreclosure, and the FHA steps in. They pay back the bank, in this case, Wells Fargo, for the loan, and in return, they get the property as collateral. Now, I have single-handedly done more HUD properties in the state of Colorado in 1 year than any other agent in the state of Colorado, so I know the HUD process inside and out, but HUDs are not for everybody, okay? Most agents, I've met agents a decade or two into the industry who literally never wrote a HUD contract. So tread lightly in the HUD department. The contract is different, the process is different, everything about buying a HUD is entirely different than most properties, but one common theme is it's a foreclosure and it's owned by a seller, in this case the federal government, that does not want to own this property. Right? They want nothing more than to get rid of this house. Okay, so they price the property right out of the gate, typically about 10% below market average. So one cool thing about HUDs is some of the math has already been done for you. You can generally believe that if a HUD is listed at, say, $200,000, HUD has already figured out that property is probably worth about $220 to $225 in the normal market. Why are they selling it cheap? Well, two reasons. Number one, it's going to need work, right? It didn't go into foreclosure because it was in tip-top shape. Now, this is not to imply that all HUD foreclosures are crap, although that is the general synopsis out there. People are like, I don't do HUD homes because they're junky properties. There's a stigma attached to them. Not always the case. I walked into HUDs where I literally eat off the carpeting, okay? So it just depends on the type of HUD property, and I walked into other ones where I was gasping for air. So it really just depends on which HUD property you're in. But don't assume that because a property is a HUD foreclosure, that is necessarily not a good property, right? In a lot of cases, people at FHA loans are just like you. They're just like me. They get into financial situations. They got a low down payment loan. The house foreclosed. The property went back to the federal government, and now it's a HUD foreclosure, okay? What's great about it is the government, in all their wisdom, is not interested in owning the property, and it's not that great at evaluating the market price of a property. I'm not knocking the feds. Let's face it. They got a national marketplace they got to look at, okay? And a lot bigger fish to fry. They just want to recover their investment in this property as quickly as possible, and as such, they sell them cheap. Right? So you can walk in and buy a HUD property out of the gate knowing you're gaining equity as long as you got the right agent working towards it, because the HUD is a bidding process, right? You got to put in a bid. Where do you bid? How do you find out how much to bid? Right? How do you not let emotions get involved in your bidding process? And most importantly, because you're here on Foreclosure Deals Coach, how do you make money on buying HUD foreclosures? That's the stuff we're going to cover on today's podcast. So a lot to cover, a lot of ground. HUD foreclosures is a topic. We're glad you're here. Let's get right to it. Okay, so we already explained how a HUD property comes to be. We explained that an FHA loan went bad. The government took it back, and now they're reselling the home. To get a HUD property, though, you must, A, be a licensed agent. So a lot of times we push to our constituents, our followers here, that you consider getting a real estate license. I'm a licensed agent myself. Now, you don't need a license to be successful in HUD investing, but it certainly helps because you have to be a licensed agent to bid on a HUD foreclosure. Right? So if you're thinking about getting licensed, doing HUD properties may be one good reason to do that. You must have a licensed agent who is registered with HUD in order to submit that bid. So step one is getting the bid submitted. But how much are you going to bid? Well, if you listen to the show, you know that analysis is a big part of what we do on the show. So we analyze a property using a software like Privy or one of the analysis tools out there, or in other case scenarios, maybe you can do a CMA or comping. I don't recommend that, but when worse comes to worse, I'd be happy to help you evaluate your HUD property. I'm going to tell you right now, I'm going to hop into Privy, do my homework, and get you a full analysis on the property. You will know from there what you need to bid. Now, keeping in mind that the property is priced below market already, this means that in a lot of cases, you're not bidding HUDs below market or below asking. You may be bidding that property above asking. Now, I know what you're thinking. Why would I pay more than they're asking for the property? Well, it's simple. If the house has $80,000 in spread in it, right, and you want to get this property and it needs only $20,000 in work, would you be willing to pay more than $5,000 over asking price to get that property? Well, simple math would dictate yes. The problem is I call it the eBay theorem, right? When you see something in an auction state, there's a natural tendency to overprice or overbid on it, right? Because you want it so bad, right? An example I'll use is years ago, I wanted to buy a Corvette. Right, this was my dream car. I had to have this car. It was a Nassau Blue Corvette. The bid price on the property, on the car, was $22,000, which was actually a pretty decent deal. But somebody else thought it was a pretty decent deal too. And before all was said and done, we were now working in the $26,000, $27,000 range for a car that's probably worth $24,000 or $25,000. Why did that happen? Well, simply put, when you add emotions to any business transaction, you are putting yourself in a bad spot. So you got to know going in, and this helps if you have coaching, right? You got to know going in how much your maximum bid on the property is, meaning you must do that analysis prior to arriving at the property. You must really know this is the most we're going to pay for it, no matter what the condition is. I'm certainly going to help you with that. We're going to walk you through the bidding process. Next up, we have to submit the bid. The bid is submitted, and one common misconception is that HUD actually cares what they get for the home. Right? They're not like a typical seller. It's government money after all. So they can sit on that property for as long as it takes to get their number. So basically a digital system, a hidden reserve, will go into your bid and determine if HUD is going to keep enough, they're going to net enough in order to make that bid worth their while. Generally speaking, HUD won't go any more than 8% below asking price. That's what I've seen in my experience. That being said, it varies per property. Some of them, because they don't want everybody out there bidding at 8% below market, they vary it in this kind of sneaky way of saying we're not going to tell you what our reserve is. They vary it from 4 to 8% and everywhere in between, so you can't tell what the reserve is. The problem is not generally getting the property for low enough, because once again, it is priced below market already due to the fact that it's a HUD foreclosure. Okay. The problem is you generally have competing bids if you're in a hot market. Like right here in the Colorado market where I am, you have to bid competitively because there are probably other people bidding on it as well. So you have to understand how to create that bid so you can get the best results. And once again, not all agents are created equally. So when you're working with HUDs, it's super important to understand that the agent has got to understand the HUD bidding process. I would ask your agent, if it's not me, if you have done a HUD before. If the answer is no, you might want to consider getting an agent that specializes in foreclosures. It's not knocking the agents out there. It's to say that this is a different process, and I've seen people lose their earnest money and get knocked out of HUD bids they should have gotten because the agent was misinformed on how to do it, right? So we submit the bid. Ideally, the bid is accepted. There's an email shipped off that tells them what the bid is accepted. And what's really neat about HUDs is if it's not accepted and you're too low and there's no other competition, that's crucial, HUD will actually tell you, as one of the worst sellers in history, how much they would have taken, right? Now, imagine a seller that tells you their bottom line after you bid. It's just not done anywhere else, which is why I love HUD properties, because if I bid them just low enough and there's no competition, I can edge off 10, 20, maybe even 30 grand off of an asking price in a non-competitive situation. But you want to employ the resources of somebody who knows what they're doing to get that done. Okay, so reach out to me. Let's talk about doing your HUD bids in a way that you have a high probability of getting it and getting the best price possible from somebody who's done literally 50 to 60 HUD transactions annually over the past 15 years I've been doing this, okay? So very easy for me to gauge how this is going to work for you and get you the best deal possible, just a matter of knowing how HUD system operates. As we're going down that path, you have to understand that HUD will allow you, actually asks you to do an inspection on the property. So your bid is accepted, you gotta write up the contract, right? The contract is submitted with earnest money. Earnest money is generally 1% of the purchase price. So either $1,000 if it's 200 grand or less, or $2,000 if it's 200 grand or more, right? So you get that, you submit the earnest money. The bid is electronically signed by HUD, which takes a couple of days. And then they send back the completed contract to you. This is the only part that has some similarities to a normal transaction. But since it's all done electronically and there's no seller to argue with, most agents don't venture down this path, okay? It's an all electronic system. HUD is a very large system. It's a government entity. They're trying to do as little as possible so they can get this property sold, because they're dealing with hundreds upon thousands of properties all across the country, okay? So the bid is accepted. The contract is in. You're waiting for signatures. Once you get signatures done, you now have the option to do an inspection. And the reason I keep saying option is one interesting thing about HUDs is they've already done an inspection. Before you even bid, you have access to their inspection. Now here's the problem. I'm not sure if I trust a HUD inspector as far as I can throw them, right? However, it's like asking a barber how's the haircut, right? He's always going to give you a positive answer. Well, I'm not saying HUD's going to lie to you. What I'm saying is they have a vested interest in selling the property. So can you trust that inspection? The answer is no, but they also can't be in a position where they've lied to you or not disclosed something to you, okay? So you've got a general idea on what the repairs are going to be by the inspection, and then you can, if you opt to, do your own inspection. The reason why I don't generally encourage you to do so is because HUD is not going to fix anything, right? And you got to know that going in. One of the agreements when you buy a HUD foreclosure is you are getting it in as-is condition no matter what, okay? They don't care if the foundation's falling down, there's a hole in the roof, and the plumbing system doesn't work at all. They've decided they've discounted this property far enough to cover the repairs. So you're walking into this knowing it's going to need some work in exchange for guaranteed equity in the property. Okay, how much equity is going to depend on what those repairs cost. HUD's got an idea, but again, it's asking the barber how the haircut is, right? How much of those repairs? That's up to you. So we're going to determine, as we're looking at the property, how much we think we're going to invest in the home prior to closing, and we will know those things before the bid is submitted. Okay, so more homework is done prior to offer than post offer on a HUD foreclosure, right? Most of the time, you go under contract, you have an inspection period, and then you do an inspection, you find the issues, and you go back in and ask the seller to pay for those issues. HUD is crystal clear. We're not fixing anything. You are buying it as is, right? Upside is the equity is built in. Downside is you only kind of know what you're getting into. So am I advising doing HUDs? Of course I am. I do a ton of them. But the reason I bring this up is because if you understand the game, if you understand the motivation of the federal government trying to offload this property, you can get a great deal on a HUD foreclosure. I mean, an incredible deal. That's why I buy so very many of them. Okay, so take advantage of the fact that there are deals out there in the marketplace. You can submit a bid. Let's talk about financing a HUD, because that's super important, where we're going to try to wrap this thing up in our typical 20-minute fashion. One thing to note is in certain areas in the country, you can buy a HUD foreclosure for as little as $100 down. That's worth saying again. You can buy a HUD home for $100 down. Now, it's in what's called revitalization areas, which tend to be lesser areas, people that need more work in that neighborhood. We don't want to stigmatize an area, but it's areas that HUD is deemed that need more work and more help to get this property sold. So $100 down payment, just imagine that, okay? You still have to put, ironically, $1,000 in earnest money, but they refund that at closing to make your total down payment $100 down on an FHA loan on a HUD property. So now you're gaining equity, right? You got your fix and flip on your hands. You could be running the investment of your life here and having to only put $100 down. Imagine that, right? Incredible opportunity. So the bid is submitted. We've got it accepted. Your financing is done. Finally, HUD has what's called the FHA 203K program. This program will actually allow you to finance in the repairs on the property. So we've covered down payment, getting a great deal, and now if you want to start adding stuff to it, like you walk in and it smells like dog pee, and obviously you're not big on dog pee, unless you are, that's a separate problem, but maybe you're not big on that, you can now add carpeting in your financing, right? And it doesn't have to be stuff you need. As a matter of fact, you can use your FHA 203K loan to just do fixes that nobody would want. You could add a solar system if you wanted. I mean, people would want that. A home theater, a man cave, etc. As long as you're adding enough that it does not exceed the after repaired value of the property, you can finance in the entire repair into the home. So you're buying equity, fixing it to the way you want it to be, and not spending a dime. You can do all this for as little as $100 down. Why do I love HUD properties? Because they're awesome, right? But as I've said before, it really does depend on who's representing you in that HUD. As a foreclosure investor, you want to make sure you're getting the best deal possible while using the best terms possible while making money on the transaction. We can help you through all of that through our Foreclosure Deals Coach program. Right? So that's what this is all about, and you definitely want to take a look at the HUD list. I can tell you, if you want to go take a look at HUDs in your area right now, head out to www.hudhomestore.com. That gets you all the HUDs in the neighborhood, but once again, you need an agent who's registered with HUD and understands the process in order to actually submit a bid. If you can't find that agent, I can be your agent on that transaction. So I would love to work with you in helping you to buy a HUD foreclosure if that's what you're looking to do. But they're a great opportunity to pick up equity, buy a house from the federal government that doesn't want it, and get a stellar deal on it over and over and over again. That's why I buy so many of them. One of my favorite stops every single morning is the HUD Home Store site to see what's come up on the foreclosure list. Unfortunately, I'm in Colorado, where currently, as of this morning, there are four HUD foreclosures in the entire state of Colorado, right? So that's not good. Right? There's not a ton of them at the moment. Not if you're a foreclosure specialist. So there are multiple areas to find foreclosures. And right now, if you're looking for a deal in this Colorado market or anywhere else, you want to make sure you're getting the right list of data, because when they do pop up, they don't last long. The bidding system can be complicated, and it really requires an expert to walk you through. I'm not trying to scare you off. I'm simply encouraging you to get the right education, the right background before you venture into HUD foreclosure investing. That's what this is all about, right? It's an educational resource. So you submit your bid, get the right right answer, know what you want to pay for the property before you get started, and make the right choice in doing investments for yourself. HUD Foreclosures is one of many facets that you want to consider when you're doing foreclosure investing. So that's the real basics of it, guys. And there's a lot more to talk about as it relates to HUD Foreclosures, but that's what we want to do. And you got to know that this investing thing is a team sport, right? You want to work with people who are helping you to achieve your goal. It is not just about you being a foreclosure investor out there looking. If you're trying to do this by yourself, you're in trouble. It's going to take more time, and the probability of being successful is lower. Kind of like trying to win the Super Bowl by yourself, right? It's not even feasible. Same applies here. We want to help you to be part of your team as part of our Foreclosure Deals Coach program. That's going to walk you through all these pitfalls and caveats and get you to the desired outcome, which is profitability in investing in foreclosures. One area is HUD Foreclosures, but there's so many more. That's what this show is all about, and that's why we're glad you guys keep tuning in and learning more right here on this podcast and YouTube show. So with that, we've covered a lot of ground today. Don't want to carry it on too long. For the call to action, if you're ready to get started in foreclosure investing, reach out to foreclosuredealscoach.com. Go to our Facebook page, like that page so we can get you more information about it, tell you about the coaching program, and get you a ton of absolutely free resources helping you to advance your career in the investing world through foreclosure. You can make more money, achieve the 3 freedoms we work towards, which is financial, geographic, and time freedom. And if you had all 3 of those freedoms, where would you be and what would you be doing? We certainly want to help you achieve that goal. That's what the show's all about. That's why we hope you're here. With that, this is Donnie Corum, your Foreclosure Deals Coach. We thank you so much for tuning in. This has been an incredible show. Hope you enjoyed it. Hope you'll continue to tune in. And as always, share this with your buddies, man. Tell them what we're doing here on the Foreclosure Deals Coach podcast. We're building a movement of foreclosure investors who are going to take over the entire investing industry and keep the market stable at the same time through taking these underpriced assets off the marketplace, which ultimately is going to help everybody and help you make a profit. Donnie Corum here, Foreclosure Deals Coach. Thanks for tuning in, and we'll see you at the top.